GM is expiring. Barra just dug herself into a hole. She has made a grave error that could permanently damage General Motors. Barra is defying everyone and sticking with EVs despite the recent slump in the EV industry and significant losses. A weekly $200 million loss suggests that her strategy is more akin to a high-stakes bet than a well-thought-out plan. Production halts and workers leaving factories are only the start of the worst catastrophe in recorded history. Does this mean that GM is in trouble? Why does Barra think that EV output is and what does this have to do with her buying off the investors to remain quiet? I'm going to take you behind the scenes at GM today, a firm that is on the verge of bankruptcy. This is precisely what happened. Imagine this then, this enormous century-old car maker called GM. There are some hiccups on the road, and Barra is at the wheel making choices that perplex everyone from powerful figures in the business to regular people. Let's start by discussing their EV predicament. GM's chief executive officer, Barra, has publicly expressed her dissatisfaction with the way their electric vehicle strategy is developing. That's business jargon for saying that things don't seem good at all. The development of Ultium batteries, which will power GM's next EV portfolio, is moving at a snail's pace. To put it bluntly, she is freely acknowledging that they fail to showcase their electric vehicle potential. And when the CEO admits it in public, you know it's serious. You recall the bit about running into obstacles. That was a serious crash. Now, instead of being a shining example of autonomous driving, GM's Robotaxi unit, Cruise, is more akin to a warning siren. They have this autonomous car that strikes a person and drags her 20 feet. Talk about a PR catastrophe, I mean. Barra must be hot under the collar on this one. GM is applying the brakes on workers and slowing down the process to likely find out how to prevent its robotaxis from becoming a threat on the streets while the event is being independently investigated. Not to mention the financial difficulties they face, the auto workers' strike. Like throwing a wrench into the gears. GM's stock price is slowly recovering from its pre-strike high, which exacerbates the situation. This is where things become even more twisted, however. Barra isn't giving up on EVs despite the commotion. She seems to be betting everything on a hand that doesn't seem very strong at a poker table. Despite GM's significant investment in electric vehicles, the industry, dealers, and consumers seem to have rather different perspectives. Speaking of dealers, picture around 4,000 of them yelling loudly that they are unable to sell these EVs. That's the scenario right now. People are essentially pleading with the government to stop encouraging the usage of EVs because there isn't even any demand. However, Barra remains certain that EVs are GM's miracle cure. A moment more on this. It's not much nicer on the financial side either. Since 2017, GM has been losing money on Cruise. We are discussing losses of an astounding $8 billion. $200 million and tallies that is $1 billion. A large capital B, however, they're not completely abandoning it. Other than increasing sales, they are attempting to reduce losses by hundreds of millions of dollars. It's like attempting to use a bucket to halt a sinking ship. The labor cost resulting from the recently signed agreements with the United Auto Workers Union comes next. Because of these contracts, GM will have to pay an additional $500 for each car starting in 2024. Not to mention the growing expense of batteries. Barra continues to target mid-single-digit profitability for their electric vehicle business by 2025. She seems to be attempting to construct a palace on thin ice. Moreover, GM's stock is down. We're talking about a share price decline of almost 15% since the beginning of 2023, or $28. It's far less than what Wall Street experts had projected and less than its 2010 IPO price at a share price of $42. And you can be sure that something is wrong when the stock falls that much. The startling thing is that despite Barra's constant promotion of an all-electric future, GM's really making a bigger profit on its new internal combustion engine SUVs, like the Enclave and Traverse. Compared to their previous models, they are bringing them a higher profit. They profit from gas guzzlers, even as they preach about electric vehicles. Every car maker is under continual pressure from the Biden administration to switch to electric vehicles or suffer the repercussions. Additionally, companies like General Motors are listening to political figures rather than their customers. You won't believe the extent to which Barra is deceiving people. We even had 4,000 dealers beseech Biden to quickly apply the brakes on electrical charging. In terms of range and charging infrastructure, we are just not there yet. The exorbitant beginning price is the worst aspect. On the one hand, they inform us that EVs will qualify for a $7,500 tax credit. However, they charge between $60,000 and $70,000 for it. The dealers are sick and weary of pitching EVs. For the EV transition, they've spent over $6 billion on equipment and training, yet they're just failing to see the need. Despite everything, GM continues to attempt to present a positive image. They are discussing lowering the price of EVs, spending billions on batteries, and collaborating endeavors while inexplicably striving for respectable pre-income tax wages. Barra, however, is not deceiving anybody. All okay, we understand. GM is now in disarray. Noll, the CEO has to be working very hard to keep the firm alive, right? Unfortunately, the answer is no. Mary Barra is not just refusing to be realistic, but she's also giving money to investors so that each and every investment remains silent. We are discussing a major proposal to buy back $10 billion worth of shares. Correct, $10 billion. Furthermore, they are increasing their payouts by an astounding 33, as if that weren't enough. They seem to be attempting to purchase happiness, or at the very least, some investor confidence. They are experiencing strong headwinds as they make their maneuver. Interest rates are quite high, automobile sales are struggling, and their EV initiatives are not so much guaranteed triumphs as they are more like a series of trial runs. However, GM seems to be generating a ton of money while attempting to stay competitive in the IT industry. With GM's shares plunging, the stock market responded as if it had just received a caffeine boost. 12 as soon as this news broke. This is where GM's strategy has some drawbacks. They are attempting to demonstrate, on the one hand, that they remain a reliable investment and a safe bet. However, it seems that they are acknowledging that their focus is more on preserving value now rather than in the future. Sure, money is pouring, but it's coming from their conventional gas-guzzling automobiles, not the gleaming new EVs. Barra is speaking on the radio about generating financial flow and confidence. She is stating that GM is carrying out its plan and anticipating growth and substantial profit margins. However, keep in mind that this is the same General Motors that is coping with labor contract expenses of around a corporation called Robotaxi is murdering people and charging $575 each car. What all of this means for General Motors' future, especially in light of their EVs. By the middle of 2024, Barra plans to address their problems with battery and car manufacturing and wants to significantly boost EV manufacturing while increasing profits. However, given how much money they're giving to shareholders, you have to ask whether they're stealing from their future to fund their current. Mary Barra isn't going to make any changes either, she said. I believe we should provide them with more Altium-based products than consumers will be very grateful for. However, it's ironic that GM has had problems constructing battery packs for its gleaming new EVs, such as the Silverado EV and Chevy Equinox EV. However, Barra claims that this has less to do with Altium and more to do with the automation in production. She's optimistic that by the middle of next year, they'll have this resolved and making progress each quarter. In Barra's vision, the adoption of EVs is envisioned as a rising trend rather than a straight line. She seems to be taking her time and hoping that any hiccups on the path are just temporary setbacks. She is counting on the notion that if they get over these production snags and begin as these new EVs are introduced, everything will begin to fall into place. What is the ultimate goal here then? GM has been cutting expenses everywhere, postponing plants, and even buying back shares to maintain the satisfaction of the stockholders. Barra is at the heart of this financial balancing act, striving to keep everything the airborne balls. The really frightening element, however, is that Barra is still predicting a sharp increase in EV output in 2024. The traders are frantic, the market is obviously not biting. And here she is, doubling down on electric vehicles. It's like seeing someone obstinately follow a course of action that everyone else finds unwise for a precipice. Throughout it all, GM has maintained its ambitious goal of being carbon neutral by 2040. Honorable, yes, but with the storm they're navigating right now, GM may not even make it to see 2030. What are your thoughts on Mary Barra's leadership style? Please share your opinions in the comments section below. I have published a new video with groundbreaking information that might harm the EV market as a whole. If you want to be genuinely surprised by what's going to happen with EVs, then definitely check it out.